Hey everybody, Dave here, Hidden Freedom, and welcome back to another video. In this video, I'm going to talk about DIVO's tax documents for tax season 2022. So that's tax year 2021. Got all of the documents received from my Schwab account. And I have to tell you, I am pleasantly surprised at the documents and how DIVO is taxed. So I'm pretty happy with DIVO at this point. They pretty much destroyed just about any other income ETF out there. NUSI was kind of an oddball, but I'm not going to really talk about XYLD, QYLD, RYLD, BST, or NUSI, JEPI in this video. I'll save that, maybe JEPI and NUSI, BST, and all the YLDs for a future tax video. Probably in 2 weeks or so, I'll do another one. Just want to let you know that I'm not a tax professional, not a CPA. So don't take this as tax advice or anything like that. Please obviously do your own due diligence. This is just what I'm seeing in my broker, and I'm not sure that every broker displays it like this or anything like that. And also they could also do a last minute reissue or something like that. Hopefully they don't do that. I heard some of the YLDs could do that, and they have done that possibly in the past as well. I don't think DIVO is going to do that, so anyways, let's not waste any time. Let's go ahead and get started. If you're interested in seeing future tax videos on these income ETFs, go ahead and like and subscribe and set that bell notification. First thing we're going to look at here is just going to look at what Seeking Alpha shows. And this is all of 2021 right here. So it's pretty stable, roughly about 14 cents per pay period. And they pay monthly, by the way. And they also did not pay out, at least the way they show it here, they did not pay out a capital gain at the end of the year. Although they actually did, it's just they kind of baked it in there. So this number here actually represents multiple things. So this is what Seeking Alpha shows, and this actually looks correct because I kind of bounced this off of Amplifies information as well. So let's go ahead and take a look at that next. All right, we're on Amplifies website here, and this is what you would see if you go to their website. We're looking at DIVO. What you would go to is you go to tax information here. That brings you to this page. And then you have kind of this monthly tax document they put out. It's not an official document, but it kind of talks about how everything's broken out or how it's going to estimated to be broken out. But what those documents look like is it looks like this here. And this is for December 31st, 2021. And look at that. Estimated return on capital, 75% of the distribution of 15 cents, and I don't know what's that, 15.28. So it's just really 15 cents, right? 75% of that is return on capital, and then you got estimated NII for net investment income as being 25 cents. Now, we're going to look back at this document here because this document did not appear to be correct at all for that month. And I didn't look at any other months, but, basically take this document here as a grain of salt. It's not an official document. This is just an estimation. Things can change. And that's kind of looks like what things did change. So we'll actually go back and look at one of the previous documents as well here just in a second. So if we go back here to this page, we see the 2021 primary layout report. This is what we want to look at. So I have that up right here. And this is for all their ETFs, by the way. So here's DIVO right here. So all these numbers right here, all these numbers right here are DIVO. And then you have the kind of what the column stands for at the top up there. And that is kind of transfer these numbers to a spreadsheet so I can make things a little bit bigger and also calculate the numbers as well. So all those numbers from that document I transferred to Excel here, or my free Excel LibreOffice because I'm a Linux user. And so here's all the 12 months right here. We got total distributions. They distributed out $1.82 in distributions or dividends, if you want to call that, last year in total. And then we have total ordinary dividends, $1.63. And of the total ordinary, we have qualified dividends of 0.66 cents. And then we have long-term capital gains at 0.06 cents. And then we have return on capital about 13 cents there. What you can take from this is a mix of 4 different things here: qualified dividends, ordinary dividends, long-term capital gains, and return on capital. And you're probably thinking, Dave, what about QYLD? It's 100% return on capital. Well, it's not this year, unless they reissue their document. It was 0%, $0 return on capital for QYLD and XYLD this year. So, DIVO is starting to look very enticing. You take it for what it is. You might have some ordinary dividends in there. You might have some return on capital. Really, the only thing that hurts you here is the ordinary dividends. Now, you have to kind of take the qualified dividends and subtract it from the ordinary dividends, subtract the capital gains from it, and subtract the return on capital to give you the ordinary dividend amount. But I'll kind of show you in my tax documents how they broke it down for me, because otherwise it's a little misleading here, right? Total ordinary dividends, and that includes the actual qualified dividends. Okay, we're looking at my tax documents here, and what we have here is we have ordinary dividends, non-qualified dividends. This is from my Schwab account. We got DIVO right there. This is the amount I received in total for the year, $2891.66. So they have to take this out here because that's either part of the return on capital or the qualified dividends or the long-term capital gain, so they take that out. So the actual portion that is non-qualified dividends is $14.92. So that's that portion there. So we scroll down a little bit here and we're looking at the qualified dividends for my DIVO, and that came out to $1,012.97 for the qualified dividend portion. Scrolling on further down here through the Schwab documents, we have the long-term capital gains here for DIVO, and it was at $245.97. And we scroll down a little bit further down here, we got return of capital here. That goes into box 3 on your tax form. And guess what? It was $140.69. So going back to this document here, we're going to go back and look at the numbers here and see everything broken out here. So ordinary, we have $1482.03, qualified $1,012.97. We got long-term capital gains there, $245.97, and return of capital, $140.69. for a total of $2891.66. And then I kind of put conveniently next to it right there how things are taxed. So the ordinary dividend there is taxed at whatever your tax bracket is. So if you fall in like the 25% bracket, then that amount is taxed at 25%. You also have, if you're in a 30% bracket, it would be taxed at 30%. We have the qualified portion there at $1,012.97. That falls into the qualified dividends section, which is taxed at 15%. For most people, unless you make a boatload of money, and you're probably not going to be in DIVO anyway if you make that amount of money, it could be taxed at 20%. So we got long-term capital gains there, $245.97 that taxed at the long-term capital gain rate at 15%, which technically could be 20% for some people, but those people are most likely not investing in DIVO because they make too much darn money anyway. All right, we got return on capital there and no tax until you sell. So that's basically falls in box 3, and you're not taxed on that until you sell the shares. So how does this break down? So this breaks down that 51% of the actual payout for me for the entire year was, falls in the ordinary category. 35% falls in the qualified. 8.5% falls in the long-term capital gains, and then we got roughly about almost 5%, so 4.8% there falls into the return of capital. So I'm pretty darn happy with that. Now that does not match Amplify's documents, what they have here. You know, they have 75% return on capital. This was for December. Let's see, when did they have the, let's see when they had that distribution there for the capital gains. That fell in December, excuse me, October. Let's just pop up the October document here, so December 29th, and see if they have anything different in there. So here is October right here. Now they have estimated net investment income is at 12% and then return on capital at 88%. So these documents are just not right at all. You know, I don't even know why they put these documents out, you know. So they don't really even jive with what they're showing here at all. And this is the real numbers here. Now going forward for 2022, because I'm actually going to receive, let me scroll down here to my portfolio. I'm actually going to receive over $12,000 in DIVO for 2022. So what I'm going to do going forward for me is I'm going to base it off of something similar to this here, right? Now, the worst case scenario is everything's taxed in ordinary, right? So if you do 100% in ordinary, you're gonna be taxed at your highest rate. You could do that to kind of give you an idea of your worst case scenario. So for me, what I'll probably do is I'll probably keep something similar to this, like this right here. You know, probably maybe even move this up to 60% or something like that, or maybe up to 70%, and then just do 10, 10, 10 or something like that, right? I don't need to probably calculate it out as being 100% ordinary, $12,000 of ordinary income, which will be taxed at the highest rate or whatever bracket I fall in, which should be a little bit lower for 2022. I'm getting slammed this year in taxes, unfortunately, and it's just it's a real nightmare. So that's probably what I'm going to end up doing for me. You know, $12,000 of income, and I'm just going to break it out. And then, you know, obviously JEPI's going to pay out a lot as well, which I'll break down JEPI in a future video. Maybe I'll do that one 2 weeks from now. So I'll break down JEPI and just kind of see how that one was taxed as well. So anyways, that's it for DIVO's tax information, and hopefully you got treated well for tax season. And I know a lot of these other income ETFs kind of screwed some people. I got screwed a little bit out of YLDs quite a bit. That hurt me pretty bad. Not as bad as it could have, but looks like NUSI actually was pretty favorable. So anyways, let me know if you have any comments, questions, or concerns, and we'll see you in the next video. Thanks for watching.